Welcome to the online news desk of the Insurance Times. The Insurance Times is the first monthly journal of insurance in India, being published regularly since 1981. We are celebrating 42 years of publication in the year 2022. Here are some highlights of some important news. IRDAI proposes allowing insurers to invest in unlisted firms. India's insurance regulator has proposed to the government that insurers be allowed to buy over 10% of unlisted firms without approval, regulatory and industry resources said, a move that could unlock new funding avenues for startups in Asia's third largest economy. Currently, IRDAI does not allow insurers to invest in unlisted entities without its permission. IRDAI has sent a proposal to the government to allow buying a more than 10% stake in unlisted firms by insurers using over 10% of the monies lying in their shareholders' fund, policyholders' fund, or funds maintained by a reinsurance company, according to the two sources. $2.65 lakh retail investors exit LIC shares. According to the latest shareholding pattern of LIC, July-September quarter witnessed an exodus of over 2.65 lakh retail investors from LIC. However, the number of shares held by 35.23 lakh retail investors has increased to 12.21 crore shares from 11.86 crore shares. This is an addition of 35 lakh shares or 0.05% to 1.93%. Retail investors are adopting cost averaging or buy on dip strategy as the share price kept falling every month. Currently, LIC shares are ruling near their lowest point since listing at ₹595 against the issue price of ₹904 and ₹889 for policyholders. IRDAI seeks to ease entry capital. The IRDAI has suggested the government to ease the minimum capital requirement of 100 crore rupees and permit the regulator to fix the amount depending upon business plans of the prospective company. Doing away with the minimum capital requirement of 100 crore rupees would allow entry of small specialized and niche players, which would help in increased insurance penetration and density in the country. Like in the banking system, we have microfinance institutions, regional banks, and small finance banks. So we have all categories of banks. Then there are non-banking financial companies. In the insurance sector also, we should have different size players to come into the market so that they can operate in smaller geographies, IRDAI Chairman Debashish Panda said in an interview. LIC launches new guaranteed return single premium plan. A new guaranteed return single premium plan called Dhan Varsha has been launched by LIC. It is a non-linked, non-participating individual savings life insurance plan which provides a combination of protection and savings to policyholders. The policy offers a guaranteed lump sum on maturity as well as a guaranteed death benefit to family members in case of the policyholder's untimely demise. The Dhan Varsha scheme will be available for sale only until 31st March 2023. For opting the 15-year term plan, one's age must be at least 3 years. For choosing the 10-year term plan, the minimum age is 8 years. The policy offers two options. Option 1 is 1.25 times of tabular premium for the chosen basic sum assured, and option 2 is 10 times of tabular premium for the chosen basic sum assured. We shall be back after a short commercial break. Please stay tuned. Welcome back after the break. IRDAI sets up Health Insurance Consultative Committee. IRDAI has set up a 15-member committee for 2 years, asking it to give suggestions for increasing health insurance coverage in the country. The 15-member committee is headed by Rakesh Joshi, member at IRDAI, and it will have representatives from the healthcare and insurance industries. Motor insurance rides on vehicle sales to close in on health. Motor insurance premiums riding on higher vehicle sales and repricing of third-party premiums have compensated for the normalization of growth in the health segment. This comes despite health insurance premiums moderating in the first half of the financial year. According to the data released by the General Insurance Council, health insurance premiums logged an 18.9% year-on-year growth in HI FY23 compared with 28.8% in the same period last year. On the other hand, motor insurance has continued to grow neck to neck with health, reporting a growth rate of 18.9% compared with just 5% growth in the year ago period. IRDAI proposes changes to reinsurance rules. IRDAI has released an exposure draft seeking amendments to reinsurance regulations. In the draft, the IRDAI has sought to revise the order of preference while placing reinsurance businesses among other things, which could prove to be undesirable for the state-owned General Insurance Corporation. The objectives of these regulations is to harmonize the provisions of various regulations applicable to insurers and reinsurers, including foreign reinsurance branches and Lloyd's, to enhance ease of doing business by amending the regulations, IRDAI said in a circular. Currently, Indian insurers are required to seek best terms for their facultative and treaty surpluses from Indian reinsurers holding minimum prescribed credit ratings for the past 3 years. Now on, General Insurance Corporation and 3 category branches of foreign reinsurers. NHGI may hold officials liable for accidents. The National Highways Authority of India has said that it will hold officials liable for any fatal or serious accidents that occur as a result of poor road engineering works. In a circular, the NHGI has taken a serious view towards the dereliction of duty by the representative of NHGI involved in the process of issuance of the provisional certificate, thereby jeopardizing the safety of users in utter disregard of the policy guidelines and provisions of the contract agreement. Further, the Highway Authority of India said it has noticed that provisional completion certificates were being issued, keeping safety work such as road marking, road signages, and end treatment of crash barriers in the punch list. This was all from the Online Insurance Times news desk. We will be back with latest news in insurance industry in our next edition. Please click on the subscribe button and press the bell icon to get notifications for the next video. Stay connected.